Hey, folks, on today's Rebel's Edge, investors anxiously awaiting tomorrow's PCE print. CRM Salesforce bringing the market down, second day major indices in the red. And what's going on with the American consumer's absolutely insatiable appetite for footwear? All this coming up on the Rebel's Edge. Hey folks, Marc and Ryan, CEO and Senior Market Strategist, Marc LoPresti here. That gentleman to my right or my left, depending on your perspective, is of course Ryan Mastro, Senior Educator, Analyst, member of the Marc and Ryan team, without whom we could not do what we do every day for our many subscribers, followers, and members of the incredibly strong Rebel Nation. Ryan, thank you so much for joining me today. I think we're bringing a little bit of a younger, fresher look to the Rebel's Edge. What do you think?
Well, it's pretty easy to beat a Jon and Pete. Come on now. They got a couple of years on us, right? Just a couple. No, I'm just kidding. It's I'm happy to be here. Thanks for having me.
Well, we've certainly increased the hair quotient, if nothing else.
I don't know, man. It's going quick. I don't want to jinx that. Come on now.
Well, Jon is still in Hong Kong, folks. Jon was swept over there to speak at a couple of different events, and he, I believe, is in the air coming back to this side of the world. Pete is also attending an event in Florida today. So let's jump right in, Ryan, with the macro minute. In today's macro minute, I'm going to do something a little different. It's macro in the sense that the American consumer, right, the strength of the American consumer, so much of what the Fed is focused on, looking to see what that PCE print comes in at tomorrow. And last week, we covered quite a few names in the footwear space. On Holdings, ONON reported, I think it was Tuesday of last week, covered it on the show. Stock popped on earnings. We talked about it again on Liz Clayman's show on Friday when Jon and I did the split screen about the strength in the buying power of the American consumer for footwear. And today, that story continued. By the way, Ryan, we told Liz that we remained bullish, not blanket on everything consumer discretionary, but it seems like people are willing to bust out that plastic when it comes to their kicks. And look, we had Birkenstock up 10% today. Yeah. Foot Locker up 20%. It tells me that the American consumer is willing, when it comes to the stuff they love, the spending is still there. What's your thought on this, Ryan?
Honestly, very surprised. Like you're saying, this is a niche that I think really caught everybody off guard. You guys were on top of it. But you look at the consumer, I think you've talked about it on prior sessions, really, really weak in general, that you're seeing the credit cards, usage go up. But if they're still willing to put those kicks on the credit card, like you said, Foot Locker absolutely surprised the hell out of me. But again, Dick's Sporting Goods kind of led the way, right? They came out first, basically surprised. I would have guessed Birkenstock would have jumped as much as it is. So to me, this is a little more of an anomaly. I'm not necessarily saying I'm going to stay with the trade. I'd probably be looked to take my profits off, at least basically minimize my risk on these, because they are, again, compared to the rest of the sector, way out ahead of themselves at this point.
Yeah, I totally agree. And as we always say, folks, take profits, especially with markets that are trading with this kind of volatility. The vol's been down a little bit lately, but still volatile. Shorten your swing. DDA, as Pete always likes to say, discipline dictates action. Don't be afraid to take profit. Let's get in now to the fantastic futures segment. And Ryan, on this part of the show, as you know, we talk about different futures that are moving the market. I'm going to start with a new one, uranium, something really interesting that we're keeping an eye on. I saw a statistic just this morning that was really eye-popping. In just the first quarter of this year, 62 nuclear reactor projects got started and were in process. So I think that's going to continue as we see the proliferation of micro reactors, so smaller and smaller and smaller as nuclear continues to proliferate. What does that mean? That means demand for uranium is going to surge. But you've got a continuation of the copper story that I covered with Jon. I think it was yesterday or the day before. Tell us what you got.
Well, yeah, I mean, copper had a hell of a run, right? And I think when you want to try to figure out why, it's usually demand, right? Futures are going to run, right? It's all about demand. So where'd that demand come from? I think when you look back on charts, you probably want to be trying to eye up the comparison between what China did. China is one of the biggest demanders of your copper, pretty much all the metals, right? We know that. And when they buy aggressively. They buy in multiple years. They don't just say, I'm going to go buy a little bit. But when you look at liquidity that was coming back into China, you look at maybe your FXI, and which is actually just pulled it up there on the chart. That's great. But you can see that the candles, the blue or the green and red in the background, that's the FXI, which is your kind of a really good measure of your ETF for the large caps and what was going on. So as liquidity was coming in, you saw that same liquidity start to really jam up copper prices. And we've been on an unbelievable tear. So I think that is phenomenal. I'm looking for, maybe a little bit of love out of China again. Maybe then we could start to see a little bit of a bottoming formation in your copper. Maybe even help that a little bit with silver, because I know you were talking about that as well.
Absolutely. By the way, folks, this is part of why Ryan is one of the best in the business at what he does. If you're not already a subscriber to one of Ryan's services, rush, don't walk, run over to marketrebellion.com. Smash the registration link. Ryan, what services do you head up for us, just so the folks at home know?
Well, we have momentum services, which basically encompass the pit. We have beginner to full on all day live action in there. I help with Wayne and Greg in those. In terms of our UOA, we do the beginner services for UOA. So we have a UOA Essential and that. And then we have some of the credit spread services, so iron condors and credit spreads. So yeah, right up the wheelhouse of being an ex-floor trader, right? It's kind of right up in the sweet spot of what we used to do.
Love it. So if you're just getting started with us, folks, go to that UOA. That's our Unusual Options Activity Essential, UOAE. Click that link, get started. You will not regret it. Let's jump into the stocks that we're going to cover now today. Man, oh man, Salesforce, CRM. Really interesting what's going on with this stock. Mark Benioff, arguably, I'm a big Benioff fan. I'm a pretty big Salesforce fan. I think this is a company that has continued to innovate, if not through internal innovation, but through acquisition. They have posted quarter after quarter after quarter remarkable numbers, and the street basically beating this one up, I think, a little bit more than necessary, right? Because yes, they did miss estimates. The stock is off almost 11% on reduced expectations. Analysts had slashed price targets, and some folks actually saying AI might be a bad thing for Salesforce because it might diminish the need for what Salesforce does. I don't agree, Ryan. I still like this stock. I might even look to pick a little bit up if it starts to get really cheap here. What's your thoughts on CRM?
Yeah, I think given the scenario, I mean, look at the chart. I mean, it's a massive gap. I actually have it down around 20% now, down over $50. So, but it is rebounding on the day. You left a big island gap on the chart. So we had a big gap from 2 earnings ago. The prior earnings didn't do too much, but I think the big scenario here is you have a couple things lingering. One, obviously the AI story. You also have your HubSpot, which Google was in talks with, right? In terms of how is HubSpot a takeover target for them? I don't think that really plays into their outlook, obviously, but HubSpot looking a little bit better, maybe has a little bit more upside potential. But I agree in terms of the bottoming formation here. I'd probably give it a couple of days, then maybe start to see if you can see a bottoming formation, and it could be definitely something you would pick up, especially post earnings with cheaper implied volatility. That to me is a really big key.
Love it. Absolutely love it. Let's move on to Tesla. Man, this is a stock that's been a struggle to love this year. It was definitely one of our larger holdings last year on the family office side. I'm a big believer in Musk. A little bit of positive movement out of the stock today on a word that Tesla's self-driving automated driverless car technology and associated offerings may actually get approval and start being used in China, and that the company might start seeing some cash flow from that. There is also, of course, some question around Musk's latest proposed compensation package that's going to be voted upon at the upcoming shareholder meeting. overall concerns about him being stretched a little bit too thin, of course, with all of his various Tesla, SpaceX, and other projects. What do you think, Ryan? What have the charts been telling you in this name?
Look, barring the news of Elon himself and kind of getting himself into hot water every once in a while, I think the news out of China is mixed. We had a big rally out of a couple weeks ago, so this would be the confirmation, but we're not really getting that out of this news story quite yet. So I'm not really gung-ho bullish. I do see on the charts kind of an inverted head and shoulders, so it definitely looks like if they really want to get this thing popped and rocking and rolling, obviously you have things lingering like that package that is that something that it could take the stock down a little bit? I don't really think it will. I mean, it's already been out there. It's been I think that's already news that's priced in. And this is a stock that has such, I should say, so many negative stories. And last time we had earnings, it popped. And not that it was phenomenal earnings, but all of the news was already baked into it. So I think now any kind of positive for this thing really gives it an opportunity to really get going. I'd probably wait to take out the highs a little bit. Maybe we have a high back on 521. That's about 187. So for me to really start to get bullish, I probably want to see that. But in general, I think it's starting to look pretty good. We have a basing formation. It's hovering above its 50-day, all good signs. But maybe want to wait a little bit for more information before you go ahead into this one.
Fantastic. Let's hop over to Agilent, a very simple stock symbol company getting beat up pretty good today. The stock is off almost 7.5% as we are live here right now. They beat the streets Q2 earnings and set positive guidance for Q3 of 2024. I think that was on the basis of all of this unexpected demand for a non-essential outpatient style services that has gotten the managed care sector, the insurance side, so beat up. Agilent, of course, is a provider of different materials and goods for the life sciences sector. They benefit from increased demand for non-essential outpatient style services. But man, oh man, the street is just beating the heck out of this one because the guidance was below what the consensus expectation was. It really seems to me, Ryan, and maybe a comment from you on this as compared to about the stock itself, although if you have an insight there, happy to hear it. It seems to me that the guidance story has become the tail wagging the dog in earnings reports these days. Am I crazy, or are I seeing that more and more as time goes on?
No, I think you're dead on. I think that's the toughest part about playing earnings is that you don't know. That's the one kind of unknown. You can kind of guesstimate on what your competitors are doing. You can kind of guesstimate, again, I think in terms of where the stock's been, how it's been trading, getting a good feel for it. I mean, we already had a little bit of a sell-off in this one. This was going from like 155 to 145 before earnings. So we already had a little bit of a downtrend, but I would have never guessed from that perspective that we would have dropped as much as we have. And it's making a great comeback today. So I think that is a good sign. I mean, you're back up from 125 on the low. You're back up $10 on this thing. So that's a really, really good sign that buyers are willing to step in this stock and push it back up, getting back above the 200-day. That's all positive signs. So again, this would be one I'd probably look at, maybe give it a day or so, let that volatility come down. And I definitely think this is one that's going to be on our radar here in the near future.
Nice. All right, one last stock to round out our fantastic four that we try to cover every day. Best Buy, one of my favorite window shopping brick and mortar stores, absolutely crushing it. The stock is up almost 13%. And of course, that is on Best Buy's as we sort of round third base here in this earnings season. Best Buy reporting Q1 earnings, higher earnings per share, slightly lower as compared to expectations, but company, again on guidance, remaining very positive about future performance, reaffirmed its guidance for the rest of this year and for 2025, and possibly catalyzed by a shorter replacement cycle is what I'm hearing, Ryan, that folks might actually trade in their current smart TV or look to upgrade their current smart TV or smart home appliance that doesn't have AI functionality built in or associated with it for one that does, and that AI may actually increase or shorten that life cycle for consumer discretionary electronics.
Interesting.
Because of that. I mean, I didn't see that one coming.
No, that one kind of blows me out of the water. I would have thought that would have been more of a software side, like through your provider, like like your voice command on your thing. That's find me this show that matches up with that. Not necessarily that it has to be built into the TV. So I think there could be some software workarounds for that stuff. So maybe I'm a little more of a dissenter on that opinion. But the stock itself, I think, again, surprised me, right? The stock's been in a downtrend for the past month and, was looking pretty lousy. But I think in general, you think about, some of the surprises that have come in, still in this discretionary space of the consumer. A little bit of a surprise, maybe a little bit of a short squeeze in terms of what's going on here because we had this kind of downtrend. So I'm not really anxious to jump into this one and keep playing the bull. Right. And I probably even consider if it starts to top out here, probably even maybe look to play this on the downside that, given the rest of the space. I mean, it's not footwear, right? But it's, it's the electronics. So I still think there's demand. I think the company's done phenomenal in terms of what they do, right? They do their price matches, which is just awesome. Like, I agree. I'm a big fan of the company itself, but, again, I'm a little bit hesitant about kind of jumping on the bandwagon here.
Totally agree. I think we could actually see a pretty big sell-off on this thing.
Big gap below, coming back into some support. You could easily give back, $10 on that easy.
Yeah, I mean, we were only $4 and change away from their 52-week high, folks. That's another thing to keep an eye on. All right, so we are now in the final segment of the show. We call it Pete's Red Zone Sports, even though Pete's not here. So 2 things that are on my radar. Number 1, and if I don't mention this, my daughter Elsa will kill me. Our beloved New York Rangers in the do or die Game 5 Stanley Cup playoffs. That is going to be tonight at 8 o'clock. Lots of TVs, smart ones, maybe with AI from Best Buy, at homes and bars are going to be tuned into that. Let's go Rangers. Where's your money on that matchup? You think they got a chance? I mean, the Florida Panthers, I didn't even know there was ice in Florida, Ryan. How do they have a top-flight hockey team?
Florida Panthers. Come on, Pete's got to be all over that.
I'm sure
you guys have a little wager here or what?
I'm sure he is.
Yeah, I probably got to play the Rangers. I think I'm on your side on this one.
I love it. And we don't condone illegal betting. That's why when you and I meet, it's often in Atlantic City so we can do it the legal way. And here's the other interesting one. And this story brought to us by producer Jared. As you might have heard, Iron Mike and Iron Mike Tyson was on stage with us just a few weeks back at Grant Cardone, our partner Grant Cardone's 10X Growth Con. Absolutely incredible. Mike was one of the best speakers, and we had so many incredible speakers, including Arnold Schwarzenegger, Tucker Carlson, Mike, of course, Peyton Manning, Pete and John. But Mike talked a little bit when we were with him at that event about his upcoming fight with Jake Paul. What Jared was telling me, apparently Mike had a little bit of a health scare. He was on a flight not too long, a couple of days ago, and experienced some dizziness. And what do you think? Is he ready for this, or does Jake Paul have a chance, or is Mike going to put Jake Paul where I think he belongs? To give you a little sense of what my opinion is of that guy. There's
2 factors to this. One is age, right? So we know Jake Paul's much younger, and I'm not going to call Mike Tyson beyond his prime, but he's getting on the older side of this. But I still think Mike Tyson crushes him. Just the beast that he was in his prime. I haven't watched many of Jake Paul's fights. He's a good fighter. He's done some WWE type stuff, all kinds of just wherever the money's at. So this seems like I'm going to throw my hat in the ring for one big push and get Mike back in the ring. They are technically, I think, friends right before this all happened. But yeah, I think on the big push here, you got to go with Mike, right? You got to go with the champ.
Well, I'll tell you, my money is on Iron Mike, a heck of a nice guy as well. Got to tell you, it's not true what they say, and certainly not from that scene in The Hangover where he knocks out one of my most favorite comedians of all time. And I'll tell you, my dislike of Paul is not just random. I was at dinner about 2 years ago in Miami with Jon. Our buddy Kevin O'Leary was with us. A couple of other people who I will not name drop. We were at Carbone, the famous Carbone restaurant in Miami. We were sitting not only with Jon Najarian, Kevin O'Leary, and one of the owners of Carbone, but Jake came over to say hello. None of us had met him before. He acted as if he knew everybody at the table. Could not have been more of an a-hole, and that left a really bad taste in my mouth. So, Mike, if you're watching, knock him TF out, my friend, and you are not over the hill. Folks, that's going to do it for us for today's Rebel's Edge. As you know, this being a Thursday, this is the last day that we will be able to address our great Rebel Nation through this particular medium. Of course, tomorrow, for our subscribers, we will be hosting the weekly cocktail hour. Looking forward to that. You can catch the Rebel Setup every single day, Monday through Friday, 8 a.m. to 9 a.m. The most important way to start your day the smart money way with Steve Kalasian on the Rebel Setup. You can subscribe to that as well as UOA Essential, Rebel Pit, and other services that are brilliantly led by this guy here. Wait, no, that guy there. There he is, Ryan Mastro. Ryan, thank you for being with me today. Have a fantastic weekend. I'll see you on Cocktail Hour tomorrow. And to the rest of the Rebel Nation, we'll see you on Monday. Have a great week.
I'm going. Thanks.